Hi, this is Alan Gassman. Welcome to Thursday, March 17. I am here with one of my favorite people, Luz Randolph,
Hi.
Dr. Luz Randolph. And
Hi.
we are going to talk about St. Petersburg College, charity, and me. We're going to talk about having Uncle Sam help us help others. And we're going to learn a lot today, whether you want to or not. That's that's what school's about, right?
That's the good part, that they're here because they want to learn.
Right, right. So Luz, before we start, or as we start, tell us a little bit about you and what your background is, what kind of doctor you are, and what drew you to this profession.
Awesome. Well, hello everyone again. Thank you so much for joining us. Thank you, Alan, for being a partner with St. Petersburg College Foundation in our endeavors to make sure we continue to engage our community. As Alan shared, I like to go by Doctora Luz Randolph. Doctora is the Spanish version of doctor. I am a higher education professional. I began my career in higher education in 2008, always been focused in underrepresented, marginalized groups and working in student affairs. And I began working in fundraising about 6 years ago in engaging our community and creating different diversity initiatives at a prior institution. And then I landed at St. Petersburg College about a year ago. I'm the executive director of development and working really with everyone on our college to engage our community in philanthropic endeavors that will continue to help us, our mission of educating and providing high quality education to our community. So that's just me.
Beautiful. Well, you're a pleasure to work with. Really appreciate you being here today. We have a lot of CPAs and financial advisors who always want to know more about charitable giving and the technical rules, but also the practical parts that we don't really know that much about, and how you can dress up your charity to attract donations and support, which you are an expert on. So we're looking forward to learning from you. So this is the initial talk. On April 21st, we're going to talk about a survey of charitable gifting vehicles. It's going to be a little bit more complicated than today. On May 19th, we're going to talk about private foundations from A to Z and how they can help a public charity. June 16th, we're going to talk about life insurance planning and not for charitable and non-charitable purposes. And then on July 21st, we're going to talk about charitable planning for the business owner. Now, if there's more that anyone wants to hear about or know about, you have our email addresses there at the bottom. And if you have any long, complicated questions, it's randolph.luz@spccollege.edu, and she'll answer them. If you have any simple questions, it's agassman@gassmanpa.com. If you are a Florida lawyer, we'll be sending you your CLE course number and description very soon. And we'll be sending you Florida CPAs a certificate of attendance. If you have the word CPA somewhere in your email address, we'll know. If you don't get it, please send me an email and I will be glad to take care of it. There's a lot of people at the St. Petersburg College Foundation that help to put these things together, that help to support a college that has almost 30,000 students. So hats off to all of those people. You've got 29,183 undergraduate students back in 2018, 2019, 11,000 male, 18,000 female. I wish I had gone to that school. And quite a bit of online right now. What's the word on the COVID-19 situation? Are you guys still going strong, or what's your biggest challenge and what's your biggest achievement from that?
You know, I will tell you that St. Petersburg College was established almost 100 years ago in 1927, and we've always been in the forefront of all the changes that are happening in education. And when COVID impacted us all, our college took less than 2 days to transfer all of our 1,800 courses to online, which was a formidable task for our faculty, staff, our IT, our leadership, but it got done, and our students have been really, 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 I mean, they're grateful. And I'm not saying it simply because we got it done, but it's because they've shared it. We tried our best to ensure that COVID didn't impact their educational journey. So we took about 2 days to transfer those courses over. We are still working with CDC guidelines. We did bring classes back, but at a smaller scale. We're still checking out everything that's going to happen over the course of the next academic year. But our students are still enrolling at a high rate. Whether it's for our AS courses, our 4-year degrees, our workforce development, or our certificates. So we are truly 100% equipped to continue to provide the education and the training that our students and our community needs. And we're really honestly grateful that our community around us has rallied around us and support us.
Yeah, hats off for that. And of course, we're going to talk later about gifts that are accepted. So a couple of technical things, and I know we have a lot of CPAs, a lot of lawyers, and just a lot of people who are interested in donating. So one of the main things that's happening right now is special laws that were enacted for 2020 and then extended for 2021, where a individual who does not itemize their income taxes now has the opportunity to get a tax deduction for up to $300 donated. And for a married couple for 2021, that is $600. That doesn't sound like a lot of money to some of the people on this call, but for some of the people on this webinar, actually that is a lot of money. And hats off for the donations they make. And I honestly hope that they will keep this as a permanent tax bill so that not only rich people can give to colleges and other charities, but everybody should be able to give. And I think most people would like to give. Now, the second one is really, really important for people who want to give a lot to charity, because typically you can only give and deduct up to 50% of what they call your adjusted gross income. But for 2020 and 2021, you can give up to 100% of your adjusted gross income and get a nice tax deduction for it. And I'm going to mention this again on the next slide, but I'm going to say it here. A lot of very well-off retirees have large IRAs. And when you are over 70 and a half, you can pull money out of your IRA up to $100,000 and write a check directly from your IRA to a charity. For 2021, it's unlimited. You are not limited to $100,000 because if you pull money out of your IRA, it increases your adjusted gross income. And then when you deduct it, that eliminates or reverses the situation. So you advisors who have clients that annually donate that $100,000 from their IRA to charities, please, please, please let them know that because of this new law, they can go above that. So here is a very popular slide. I'm going to call this the technical slide of the day. You can print this out on ledger-sized paper and laminate it and take it in your hot tub and read it and drink red wine and it will not stain. Or white wine and it definitely won't stain, but you do want to laminate it before you take it in the hot tub. It's going to be a cold weekend here in Florida. It's probably going to be in the low 70s, right? So on the bottom left-hand side, up to $300, you give it to a charity, a public charity, or even what they call a private operating foundation. No questions asked. Uncle Sam's going to pay for part of that donation. Number 2 in yellow, if you have appreciated assets, if you have a piece of jewelry worth $100,000 that you paid $10,000 for, if you donate that jewelry to a charity that will display it, and therefore it will be used for the charity's purposes, then you will get a $100,000 tax deduction, a $100,000 tax deduction, and save $90,000 of capital gains tax if you had sold it. And the same thing applies when you have appreciated stock. So if I would like to make a $1,000 donation today to St. Petersburg College, if I have stocks, look at that smile, I love it. If I have stock worth that I bought it for $100,000 and now it's worth I bought it for $100, now it's worth $1,000. If I sell it, I have a $900 capital gain. I pay Uncle Sam about $300, $200. But if I give this stock to Luz at the college, there's no capital gains tax, and I get a full tax deduction. I could save up to $4,000. I mean, up to $400 on a $1,000 donation, depending upon tax bracket. So that's a really big deal. And I could give money not directly to the college. I have a client who has given millions of dollars to his daughter as trustee of a family foundation. And he got a tax deduction for those millions of dollars. He put in appreciated stock, so he got the tax deduction. And now she works with St. Petersburg College and coordinates scholarships. And they interview retired military folks who come out of the military who don't have a vocation yet. And they have found that with the assistance of St. Petersburg College, they can put those people into an educational arrangement. My client's foundation pays for the scholarship. SPC, St. Petersburg College, handles the education and the guidance, and they will turn a young veteran into an earning machine who can then support her family and teach her children so that they can go to college. So that would be the use of a private operating foundation. Now, the next column where you see above the top, cash only up to 100% 2020 and 2021, that's for people who want to give up to 100% of their adjusted gross income. They could give 30% in appreciated stocks and then the rest in cash. And then on the right-hand side, we've got those taxpayers over 70 and a half. You're not limited to 100,000 anymore. As long as you're over 59 and a half, you can take as much out of your IRA as you want without an excise tax and give it to charity. So Luz, I know you didn't get a tax degree. How complicated is this for somebody in your situation? And are you able to help people understand these rules?
Certainly. So while I do not have a CPA or a JD in this matter, my whole entire role, and really our development team's role, is to facilitate this process. So we will work one-on-one. If a donor comes to us and shares everything that they want to do, and they have a trust fund or they have particular things that they work with their financial advisor, we're a conduit. We will communicate with that advisor. We want to ensure that the individual feels comfortable and can trust the process at hand. The easiest thing that can happen is like the example that you shared. The individual wanted to make a difference in veterans' lives, and they had an opportunity to do so via this trust, or it was a trust, right? I want to make sure I utilize my words correctly here. Via this trust, we just facilitate the process and communicate with the financial advisor and the family as well, because we still have to follow certain guidelines for the college. We're not going to want to say yes to a scholarship or to a donation that we can't fully execute. So for example, if we didn't have a veterans program, or if we had 0 veterans attending the college, we could essentially enhance the program by creating something to get more veterans, but we want to make sure that the gift is stored correctly. So all in all, we would work with you. If we don't know the answers, we will work with your advisors. We also have legal counsel here and an accountant as well, and within the college and our foundation, who will be part of the conversation, so we all are on the same page.
Okay, so all you CPAs, when your clients call you and say, I need tax advice, they're going to call you on April 14th and ask you for tax advice. Say, well, I know this really smart person named Luz Randolph. You can call her and she won't send you a bill and she'll give you tax advice on your donations.
100%. Right?
Now, another point I want to make while I'm on this page is, as tax advisors, we innovate and adapt a client's situation to the tax code. But how often do we innovate and adapt a client's passion to a charitable organization? And how often do we find a client that is willing to start a program that once it's up and running, the government will pay for and continue. So one of the goals that a number of my clients have shared with me, those clients who have donated well over $10 million to different institutions, is my goal, their goal, is to find a new program that isn't there and is badly needed, and to set it up and to make it attractive so that the government will take over from there. And almost everyone likes to complain about their taxes, but when my taxes are going, at least in part, to a program that I've improved in an institution like St. Petersburg College or whatever institution it is, that's a challenge that I think everyone on this webinar can take to improve the world, not only by giving money, but to improve the structure of things. Now, for those of you who have clients that are over the 50% of adjusted gross income if they're giving to their own foundation, or even over the 100% of adjusted gross income if they're giving cash, there's other ways to help a charity, and I just wanted to mention some of them because I do know that there are some very wealthy people represented in this webinar today. And one is you can make an interest-free loan to a charity or even to your own foundation, and then they can invest the money and it can grow tax-free. Another thing you can do is if you have a building, you can provide space free of charge to a charitable organization. And then you will not have the rent income. And again, this will be a donation above and beyond the limitations. I have one client who had a building. He had depreciated. It was about a $2 million building. It had zero income tax basis. He had taken all $2 million of depreciation. He donated that building to his own private operating foundation. He has an office for the private operating foundation in the building. His daughter operates the building and it's rented at arm's length. And then the money from the rent is going to pay for scholarships. And he meets the candidates. He looks at their information, he mentors them, and enjoys it immensely. So he's taken great advantage of this opportunity. Another thing you can do, and that our law firm does regularly, is we pay for advertising and sponsorship rights. That's not a charitable donation. That's a business deduction under Code Section 162. And to the extent that you have a captive audience here of 30,000 students, believe me, they buy sandwiches, they drink beer, whether they're supposed to or not, they buy clothing, they want to hear from you, and you can help their education as well. Number 4, I hope you've been refurbishing your house during COVID-19 so that you can do a fundraising party for the college or for the charity of your choice. And you can deduct the expense of the party. And you'll typically raise a little bit more than you spend, but you'll have a good time, and then your friends will support the charitable organization. So I'm always in favor of tax planning that involves parties, and this is one of them. Number 5, you can have your family members donate. If you're over the 30% or the 50%, put your hand on the shoulder of a family member that you've helped and ask them to do their part. One thing I learned many years ago from a very, very good lawyer in St. Petersburg, Joel Bronstein, he told me, anytime that you have a fee dispute with a client or anybody is having a dispute over how much to pay somebody else, just ask them to pay the money to a charity. You know, if somebody owes you $3,000 and they only want to pay you $1,000, and their favorite charity is All Children's Hospital and your favorite charity is All Children's Hospital, who cares? So one thing we do, just so the lawyers and the CPAs attending can see this is out of our standard fee agreement. If and when a client gives us, say, a $2,000 retainer and we bill them hourly, if there's money left at the end, normally the client gets that money back. But I ask my new clients to agree that that $500 of whatever would be left would go to their choice of one of three charities, and I will match it. That takes a little bit of the stress off of me to not spend all the time I need to spend to do a good job, and to know that if I have worked efficiently, that they're going to help me donate some money to one of my favorite charities. And I'll tell you, it's very interesting. Our intake person thought that new clients would have a problem with this. Not a single new client has had a problem with this idea. And here's another idea, you know, people say, well, your best friend recommended you. I just need half an hour of your time to help me figure out something. I know I won't need more than half an hour or an hour. Luz, this is the most painful experience that professionals have, because after an hour and a half, the person's still talking and they haven't really hired us. So what I can do is I can ask my intake people to say, look, Alan is normally X dollars an hour. Because you're a friend of Mr. Jones, he's willing to have that amount, whatever it would be, go to one of the following three charities. You can choose which one it is. So after the conversation, if you'll just write a check to St. Petersburg College, that'll be great. And you know what? If they say no, I don't feel that bad that I never was able to help them, because I'd rather help somebody who would help someone else. So Luz, what is the conversation with people and anything unique to St. Petersburg College about not only, you know, writing us a check now, but please remember us in our will? Because I know from having served on charitable boards that what a charity like yours receives from wills from people they didn't even know were out there can be significant and really heartfelt.
Yeah, so again, when we start a conversation with any of our donors, and I'm glad you brought up the fact that sometimes donors have an idea of what they want to do, but CPAs, attorneys, you all have an influence, right, in sharing, well, let's talk about different ways that we can make your dreams, your charitable dreams come true. And a lot of the wills and a lot of the scholarships that we establish are conversations to start, whether it's I want to help a student in a particular group to I want to create a program or initiative. And what we do is we really start building that conversation and that discussion, and individuals come in thinking we are just wanting to give right now. We'll talk about anything else later on, whether it's a will, so forth, so on. So we try to start those conversations early on at whatever age the individual is in, because we have the ability to do what we like to call combined gifts, where individuals can do cash gifts and also include an estate gift or their name, our SPC on their will. So we like to start having those conversations as early on as possible, because it's essential for individuals to know that you may not be wanting to give cash now, but you can certainly leave something behind for the college once you have transitioned on. So what we try to do here again is have those conversations early on. And if we cannot answer these discussions, if we cannot answer any questions, again, we do have legal and accounting services here for the college who will be speaking to the financial advisor or to the attorney in charge to ensure that we are all on the same page.
And do you have any sort of recognition program, or if the person agrees to put you in, they're on a list or a wall or
We do. So we're kicking off, again, as I've shared, it's I've been here for a year. We are reestablishing our Legacy Society, which is now called the Helen K. Leslie Legacy Society. And that's our society where we highlight individuals who have chosen SPC as part of their will or their estate or their planned giving. We highlight those individuals. We're kicking it off this upcoming fiscal year. Our fiscal year runs through April 1st through March 31st for the foundation, and we're kicking it off with individuals who have made us aware and have gone through the process of submitting the paperwork for this. Benefits range for these individuals, and I use that word benefits very lightly, but we like to keep those individuals engaged about what's happening in the college, whether it's through magazines, stewardship events, meeting with the president and leadership, because these are individuals who are literally investing in the future of our college and our students. So we want to ensure that we provide as much information as possible while we can, right? And essentially, once they have transitioned on, there's still, you know, there's family members who may want to continue to support outside of what's already been given to in honor of those individuals. So yes, we have a Legacy Society, the Helen K. Leslie Legacy Society. We have named it after one of our longest and oldest SPC alums. So you'll hear a little bit more about Helen later on.
That's great. And of course, people could leave a dollar amount. They could leave a dollar amount to a special purpose.
Yes.
They could leave a percentage. They could leave all to charity if no one in the family survives.
Yep.
And those are all conversations that we as advisors need to ask. I do ask my clients, well, if you and all your children and grandchildren and great-grandchildren don't survive a vacation, where do you want it to go? And the technical term for that is laughing cousins who inherit because, you know, they didn't even really like their cousins, but they lost their cousins. So giving to a university or a different charity. And of course, some people have revocable trusts, so you would amend the revocable trust agreements. Let's go to slide 21. Do you want to take us through serving as an example? Because, you know, lawyers and accountants, we know the tax end, but we don't always know the practical end. And we're on charitable boards, but maybe we really haven't done enough to set up the structure. And for the laymen who are on this talk, you know, maybe they don't really understand all of what you do and all of what you have. So why don't you walk us through these slides, you know, with that in mind?
Certainly. So a lot of individuals think that scholarships are the only way that they can assist the college, and scholarships are needed for all students at all different levels with all different different needs and in different programs. But other ways that you can assist in helping your donors make a difference is we have particular funds that help the college overall. So I've highlighted 2 of these funds, and then we have a 3rd fund that I will talk a little bit about later. Our Spc Titan Fund was established close to 2 years ago now, and this is an unrestricted fund for the college. And what that means is it helps sustain all of our academic programs, scholarships, innovative programming, student support services, every aspect of the college. It helps support it. And the reason why we have an unrestricted fund is because, as we are all aware, we create a fund with a particular purpose. If there is a dire need, we won't be able to get funding from that fund to help that need. So things that happen with the Spc Titan Fund are simple as technology needs. While we do have an Spc Student Emergency Fund, which helps our students with any basic needs, one of the things that the Titan Fund was able to assist us in over the COVID, over the last year, was providing technology to our students. A lot of our students may not have had a laptop or had access to Wi-Fi, so we were able to provide small scholarships to assist in this manner. On the flip side, we were able to assist the college to the Spc Titan Fund because we were able to expense money to get more laptops for lending programs. So the students who didn't have laptops, who were dependent on coming to campus and utilizing our computer labs, now are able to get a laptop on loan over the course of the semester to ensure that they are able to fulfill their academic requirements. And as I shared, the Spc Student Emergency Fund, this fund is there because students have dire needs. And over the last year, I began at Spc in January. We were sent home in March, and we rapidly saw what COVID was doing to our students. Our average age for our students is 27. Most of them are full-time working, part-time working students. So once businesses were closing, our students were facing dire challenges in trying to meet their basic needs, like paying their rent, getting food, childcare, all of the basic needs that were covered prior to, because they were fully working and going to school. So we launched a campaign over the course of March and April to fundraise for our Student Emergency Fund, which helped I believe it was over 300, 400 students, and raised over $150,000 to help our students meet their basic needs, to ensure that they were going home to a place to go to lights, to food, because they just didn't have those they didn't have the capital due to the impact that COVID had. So those are 2 funds that individuals, as of late, because they're newer and are receiving some heavy marketing, some donors are starting to think outside of the box and saying, well, I won't only establish a scholarship. I may want to provide a gift of $100,000, which we did receive a gift about a year and a half ago of $100,000, and the donors split it between giving to one of our funds, our Titan Fund, and then the other one to a particular program. So that's one of the ways that you can still assist in providing your donors. In particular, if they call you on April 14th and they have money to give right away, they can certainly go ahead and do that and rather quickly without having to go through a lot of the paperwork process.
Beautiful. And then what about the women's basketball team?
So currently we are running the women's basketball campaign. Again, the college over the last year has made some huge transitions on how we are going to start marketing and fundraising. And one of the things that we're doing is this HERD campaigning that's happening, and we've got it through Gift Campus. COVID has had a large impact on all institutions. In our college, one of the impacts that we are facing is our athletic program has received a tremendous cut in their finances, which then means that scholarships that were provided to our student athletes for academics, for housing, for food aren't necessarily as available as they were before. So we are running a campaign right now over the next 15 days to raise $10,000 for our women's basketball team. So all of the money will be 100% going towards the team. It will help the team be able to not only provide scholarships to our student athletes for housing, for food, for academics, but also just for the travel needs of our incredible Lady Titans team.
That's great.
For more information, we'll be able to follow up with links on where to get. Well.
And what is this page?
These are different ways that you can give. Of course, your gift is 100% tax deductible. Your dollars go to further our education and our mission. And you can do it in any way, shape, or form because you are all very well versed in the law and in tax law in particular. So your donors can actually create gifts, whether it's for themselves or in memory of. So this is another way that we can continue the legacy of someone and whose desire was to help in education. And again, when you invest in St. Petersburg College, you are investing in our community. Our grads, our students are from Pinellas County and they stay within Pinellas County, and that helps our economy. So when you're giving and supporting SPC, you're supporting Pinellas County, you're supporting our region, you're supporting our state. So those are just a few ways that, we like to keep the conversation going with our donors and with individuals who are thinking about investing in SPC.
Okay, now we have a 1-minute, 38-second clip, and I'm going to change the sound here with great technological prowess. All right, that was really nice, and she deserves a lot of recognition. Okay, let's go back. Let's go back to some technical here. And by the way, if you have any good ideas on how St. Petersburg College can raise money or be of service to your clients or to your practice, you've got Luz's email address here. The advice you give may be worth a lot more than any donation you may ever generate. On page 31, planning with IRAs. Clients really, don't realize that while a Roth IRA comes out, of course, tax-free, a regular IRA or a pension distribution made on death directly to the charity saves the family the tax money that would have otherwise been paid. So when a client comes to us and says, I'd like to put a charity in my will, my first response is, well, do you have an IRA or a pension? And would you prefer to just have the charity receive the benefit directly from the IRA? So here's alternative number one, page 33. You have the IRA or the pension account payable directly to the charity. You put in the beneficiary designation. The first $100,000, but no more than 5% of the IRA account will pass to ABC charity. The rest to my children. Or number two, if it's properly drafted, and it has to be very carefully drafted, the IRA or the pension can be made payable to the trust that you have, and then the trust can pay the money to the charity. And when the trust gets the IRA money out, that's income, but then when it gives the IRA money to the charity, that generates a deduction under the first Internal Revenue Code section that I will mention today, 642C. That's the Internal Revenue Code section of the day. And it's a really important section for lawyers and CPAs because when a trust makes a distribution to charity, if it is not specifically authorized to do so in the original trust document, then you don't get the charitable deduction. So this is important for all of your trust planning. So the third alternative is to have the IRA payable to a charitable remainder trust. Now, the stretch IRA, most people have heard of a stretch IRA. It has nothing to do with Pilates or yoga. The stretch IRA is when somebody dies, unless it goes to your spouse, it generally has to come out within 11 years and be taxable. But you could leave an IRA to a charitable remainder trust, and we're going to talk more about charitable remainder trusts in subsequent programs. And then it comes out to your children. It could come out over 20 years, and then what's left would go to charity, and it only has to be a 10% of the original interest going to charity after 20 years. So that will save and defer a lot of income tax for your children, and they can designate what the charity will be. So I have a lot of examples. On my death, the IRA could pass all the way to my wife. If my wife survives me and disclaims any part of it, then it goes to the college. So we see this a lot. Well, my son is very, very wealthy. I'm not sure what he wants to have happen to his share. He's in a high tax bracket. He may prefer to help the college. Okay, well, let's put in your will that whatever is inherited by your son will go to the college to the extent that he makes a disclaimer. So then you die and he says, well, I could accept it and pay the tax on what's coming out of this IRA, or I could disclaim it to my college. He has lunch with Luz after COVID-19 virus is all done. She convinces him very easily that he will want to disclaim this to the college. So there are a lot of planning opportunities here with the IRAs, and we want everyone just to be aware of this. And there's do's and don'ts. This is the example on page 38. The IRA is made payable to the child, and the child can either accept it or to some extent disclaim it to the charity. By the same token, if it's not in an IRA and the client says, I want on my death $500,000 to go to St. Pete College. I know I don't have an IRA. I know I can't get a deduction because I'll be deceased, but I want that to happen. Well, if your son is in a high tax bracket, leave the money to him with a request that he will donate it to the charity. And then, assuming he complies with the request, he'll get a $500,000 income tax deduction. So that's another nice planning technique. I wanted to extend an offer to everybody. No big deal, but this is 2021. So for the first 21 people who in the next week donate $20.21 to St. Petersburg College, I will match the $20.21, and I will send you your choice of one of the two books, Planning for Ownership and Inheritance of Pensions and IRAs, or 8 Steps to a Proper Florida Trust and Estate Plan. And if you donate 4042, which is not the year I was born, but if you donate 4042 or 1442, then you'll get both books and I will match your donation. And there is a picture of the books there. Now, I did not
have virtual coffee or virtual lunch with me or my team. I mean, I think it's perfect, right?
That's excellent. That's excellent. And she'll talk to your children, and your children will always respect you after that.
100%.
100%. Because she's got the doctorate in education, remember? So we have a lot of things to cover in our subsequent webinars that you're seeing here. I did want to mention the concept of the charitable remainder unitrust. Very, very popular. The client has $500,000, would like to make a donation to the college, but would also like to keep the income from this money for a period of time. She puts $500,000 into a charitable remainder unitrust, which pays her 11% of the value of the trust every year for 20 years. She's not going to run out of money with 11% of what's in this trust every year for 20 years. She gets a tax deduction. She gets the recognition for having made a $500,000 commitment. And on her death, what is left will go to the charity. And if she donates appreciated assets, the charitable remainder unitrust can sell those assets right after it gets them and not pay any capital gains tax. So as a result of that, over the 20 years, she may receive more than she would have gotten if she had simply sold the stock and kept it all. But in the meantime, it is pleasantly locked and loaded for the charity. And if somebody comes in and tries to take advantage of her, they can't take this money away. This is in a locked charitable trust. It would be a federal crime to take this person's money away. And I can think of too many times in my career where elderly people have lost their assets. If in a charitable remainder unitrust, that is not going to happen. So Luz, let's go back to you here. We've got 10 minutes left. In my profession, that's known as 4/10 of a billable hour. And take whatever time you need here. And then if there's any time left, we could talk about one more technical thing. But if not, that's great. By the way, we've already gotten a lot of nice feedback in the question box. I'm going to answer all the questions afterwards and any emails at all. But the biggest thing we ask you is to give us suggestions for what we can do to make this useful for you, your continuing education, or your education as a donor. Take it away, Luz.
Awesome. So one of the ways that Alan and I wanted to ensure that we continue to provide you information, of course, that's imperative for your profession, but also what's happening in a college, giving you different things or initiatives that are happening right now at St. Petersburg College. This week or this month, we're going to concentrate a little bit on the downtown Midtown centers. And do I have access to move to the next slide? I just want to make sure.
Sure, you're good. Just say the words next slide and I'll take you there.
All right. So for those of you who are not aware, St. Petersburg College has 9 to 11 different sites, but St. Petersburg College downtown and Midtown exist in 2 different locations. The downtown campus has 2 different centers, and it provides educational career advancements opportunities through different programmings, academic and certificate programs. Next slide. And I speak really fast normally, but because I don't want you to, we don't want to exceed the 1/4 of the billable hour, I'm going to go through this really quickly here. So one of the centers is the Cecil B. Keene Center, and we focus there on the Allied Health Center, which provides a certified clinical medical assistant program, patient care technician, and includes the following certificates: EKG, phlebotomy, and CNA. And then we have resource centers for our students, which is our Women on the Way, the food pantry, and then we also provide opportunities for our community to complete their GED on our campus, or GED assistance. Next slide, please. The Jamerson Center has different programs as well. That's also located on 122nd. I'm still working on my Pinellas County area. However, it is part of the Midtown Center and has a cybersecurity associate science degree, the general education courses. We have a year up program which assists our students in our community to get educated, and our computer information technology associate science degrees. Our SBC Midtown campus was established in 2003, and because of the high demand of students being enrolled and matriculated in our college, there was a second expansion done in 2015. And in that expansion, we have 8 different classrooms, 2 science labs, 3 computer labs, a learning support center, a community room, and a library. And that's in our Jamerson Center. Next slide, please. So what else is happening in our SPC Midtown campus? One of the greatest ideas that our provost, Dr. Tashika Griffith, is launching is the Deuces Den. This will serve as an opportunity for us to engage our entrepreneurs in our community to come and have sort of a pop-up shop at the campus. So what is that doing? That's going to provide the students access to a local business, and our local businesses access to our students, faculty, and staff. One of the ways that your clients can assist in this endeavor is this is at no cost to the entrepreneur, to our local business. So the way that we would like to continue to support this initiative is to provide quarterly support, financial support at different levels, at $5,000, $10,000, $15,000, where we would go ahead, you would sponsor that location for the business, and that sponsorship would go in 2 different ways: a scholarship fund that already exists in the Midtown campus, and in addition, it'll provide the business an opportunity for businesses and for us to bring in different businesses that can educate the entrepreneur about different things that they can do to continue to expand their business, right? That's important, especially for local businesses at this time. How else can you pivot to ensure that you are serving the community and you don't lose your business that you worked so hard to establish? So that's the Deuces Den at Midtown. Next slide, please. So Cecil B. Keene is also part of our, also offers our summer enrichment program, and the program offerings there is all exploration of career services. So it strengthens the essential college skills, creative and critical thinking, life and time management techniques. The study and test taking strategies are provided there as well. Sponsorship program funding that is needed is to support the program initiatives overall. So for entrepreneurship programming and our small business development, which is part of the Deuces Den and a fund that's already created there at the Midtown campus. Next slide, please. Our Keys to Manhood is actually one of my favorite events. I've only seen it once, but it was that impactful. This is a seminar that discusses college and career readiness, self-awareness, and community engagement with middle and high school student males of color. So we bring these students onto campus and they go through a conference all day. Last year, Keys to Manhood partnered with Pinellas County Schools, and we had 5,000 role models to develop 2 dedicated seminars for middle and high school students. And then we also are able to provide particular scholarships to students there as well. So if this is an opportunity for an individual who needs to give money out right away, but it's really focused in wanting to increase the accessibility of education for students in middle school and high school, this is a great test gift, right? Because it's a program that already exists. We have, it's been happening for a few years, and we have great data to show how students are being impacted positively in their academic journey. Next slide, please.
And boy, all these programs need names on them for major donors, don't they?
We have naming opportunities as well for all of the 8 classrooms, 2 science labs, and library and community room. And for the Deuces Den, one of the ways that we are trying to ensure that our community is engaged, the Deuces Den is the opportunity for local entrepreneurs to come onto campus for a particular given time. The money also allows you, right, whether it's your business, whether it's your donor's business or your client's business or just the client overall, to name that particular location for the time that's there. But it's not only about the naming opportunity, it's also about the funding that's being received to provide scholarship and education to our students, our faculty, staff, and our community.
Beautiful.
How did I do? Am I billable?
You did great. You did great. We have 4 minutes left. That's a lot of time. Okay, we're going to talk a lot later about life insurance, mostly about term life insurance, because a lot of people just don't understand it and they don't do the things that they would normally be able to do with life insurance. But it's pretty easy just to make a charity the beneficiary of a small amount of your life insurance. But I hope that you CPAs and lawyers are talking to your clients when you do an estate plan about how much life insurance is needed. I typically use a 4% rule of thumb. I say, well, if you die and you leave your family $1 million, 4% of that is $40,000 a year. If they invest wisely, they'll be able to have $40,000 a year for many, many, many years. And if $40,000 a year is enough, then that's fine. But if $40,000 a year is not enough and what you're going to leave them is $1 million, sounds like you need to buy more life insurance. Doesn't have to be permanent, because once you reach age 55, 60, or 65, you hopefully won't need very much of it anymore. It could be term life insurance. And we have some example term rates. A standard health male, 15-year term policy for $1 million, $1,215. I like to share these charts with my clients, and I like for my clients to walk out the door knowing what my rule of thumb suggestion is for their life insurance, so that they will get this life insurance. And if they want to make part of it payable to a charity, you know, that's completely wonderful. But certainly something to think about. Now, on the wills, the other thing I wanted to mention, and I don't see the slide here, is if your client is leaving a significant amount for their family and would like to leave a fixed amount for charity. Let's say I'd like to leave my family $2 million in trust and my alma mater $100,000. Well, when you wait and die, if you wait until you die to make the donation, there's not going to be an income tax deduction. But if you put it this way, there will be. I leave $2,100,000 in trust for my family and charity. The first $100,000 of income produced by the trust will go to the charity. The rest will be held for the family. Now, that's going to carry out $100,000 of income that would have been taxable that the family would have paid. So that's going to save the family generally about $35,000 of income tax. So don't leave a direct distribution to charity when you can make it an income amount, and the charity will not mind waiting. The other thing to make sure to tell clients is those who itemize their deductions, here on page 9, single person, you need over $12,550 of itemized deductions to write off anything over $300 going to charity. Your itemized deductions, of course, are interest, medical, charity for the most part, and real estate taxes. So if you don't quite reach the $12,550, what you want to do is you want to bunch your deductions. So if I'd like to give 10,000 to charity and my itemized deductions are 6,000, if I want to give 10,000 a year to charity, my itemized deductions are 6,000, I should go ahead and give 20,000 to charity and the other 6 so that I get a nice big deduction in year 1. Year 2, defer paying these itemized deduction expenses if I can, and then year 3, do it again. So in year 1 and year 2, I'm well over. And if I only want the college to get 10,000 a year and I donate 20,000, I can simply give 10 to the college and another 10 to what they call a donor advised fund or a community foundation. I give it to them, I get the deduction, and then they give it to the charity the second year. So bunching deductions is another important strategy. So Luz, thank you so much for allowing me to help you and the college. Advisors, CPAs, lawyers, thank you so much for listening to us today. Thank you for your advice. We've already received a lot of it, I see. Potential donors, if you have any questions, you know who you can call. Luz, any final words here?
No, thank you again. And if, again, any questions, I've already gotten an email, so I'll be answering those emails out. But if you have any questions, any comments, any concerns, or if you want to learn more about where else you can devote some time for your clients to learn about SPC, just let us know. We'll be more than happy to set up a virtual tour or a CDC guided tour or conversations with anyone in particular. Sign up for the next one on Wednesday, April 21st, because I mean, again, these two energetic people want to make sure that they're sharing as much information as possible with you all. So make sure you sign up.
And by then you'll be moved and there'll be books in that bookshelf, right?
Yes, we are moving downtown St. Pete, so this is why there are no books.
Okay, so we hope everyone will join us April 21st. Send us your questions. Send Luz the hard ones, me the easy ones, and have a great rest of your day. Thank you.